Yo, what's up, everybody? Thank you for stopping by. My name is Mark. You are watching Trading with a Dummy, and today I'm going to start a series which every once in a while, if I feel like I have something I can actually teach people and help them and drop some gems, I'm going to do a video session called Homework. And basically, I will introduce to you guys some of the things that I've learned and walk you through it, and hopefully you'll be able to utilize it to be a better trader and investor. And today, this specific episode is basically a complement to the Come Up series rolling 4 episodes. If you're unfamiliar with that, I'm going to put the link below so you guys can watch that episode first. It's going to show you how to properly invest for leap options to grow your account. So if you're not familiar with options, this episode is not for you. Go ahead, just exit out. Make sure you like and subscribe first though, and then come back another time or watch my other videos. I have a bunch of skits on stocks and interviews with some of the financial gurus with May. It was a pretty harsh pullback for a lot of people who were in the tech sector. And if you watch the Come Up series and follow the Come Up series, one of the biggest blueprints is to stick to the script. Don't freak out, don't sell. And because of that, I think a lot of people over leveraged a little bit last year in 2020 because everything was going up. You could buy anything and it was going up and going up and going up. So a lot of people had invested in ARKK, Tesla, XOY, XOK, SMH, ARKQ, ARKW. It was a lot of ARKs, AMD. And what ended up happening is that they were in the money. They were green for a while, and then a pullback happened, and it was a pretty bad pullback that lasted a lot longer than we expected. And people who didn't exit, like myself, for example, we just saw our account get drained. And it was a lesson learned that sometimes profit is profit, and yet you have to try to see where you at and if you have a chance to come back or not. So I'm going to go over this specific site. Let's jump over to my computer. It's called Options Profit Calculator. Now, I do want to emphasize real quick that on the Options Profit Calculator, it does not account for like open interest and volume and momentum at all. It specifically only accounts for time and price. That is it. So when you get on here, for example, if you're doing a put or a call, we're going to just use a real life example that I'm currently in, which is an SMH contract. We're going to go for a long call. I was bullish on it. So you'll click on that and then you come down here. You can use this while you're actually trying to get into a position as well to see exactly where you need to be profitable and where you need to basically exit stage left if it's going way too bad and you see no light at the end of the tunnel. So when you pull up the options profit calculator, you have the option to put in a symbol. You can put in a symbol, and we're gonna go with SMH. Like I said, this is a real life situation in a contract I'm currently in. You're gonna get the price. It's gonna show you the current price as of today, which is $263.37. Obviously, I want to buy. I'm not writing or anything like that. And then you can click the option chain. When you click select option, this menu will pop up. And this menu will give you all the contracts and dates that they expire. And one of the things when you follow the Come Up series is that you want to do options that are at least 2 years out. They're called leap option plays. So if you go on YouTube and look at what leaps are, it can range anywhere from 6 months to a year to 2 years. But specifically when you follow up the Come Up series, it's 2-year plays. And when I ever speak about leap plays, I am also as well speaking about 2-year long plays. So last year, I believe it was earlier this year, around January, February, right before the pullback, I had gotten into a January 2023 expiration call for SMH at 315. So you'll go here and you look at the bid, the mid, and the ask. I typically like to go with the mid because realistically, when you do set in your contract, when you decide to purchase it, you don't ever really want to go for the ask because you're just overpaying. And if you go for the bid, you're probably not gonna get filled. So the mid is pretty much the realistic entry price of where you can get in. So you click that. So right now that contract is going for $15.28. So remember, with options, you're basically taking that $15.28 and you're timesing it by 100. So realistically, if you just look at it, it's $1,528. That's how much it costs you. And it shows you right here the total cost of this contract. You can put how many contracts you want. We're just gonna go with one right now because I only have one contract currently in my Roth IRA for SMH. In my other accounts, I have more, but on my Roth, I tend to just buy stocks and hold them. And every once in a while, if I feel, comfortable, I will get into a few options trade. I always just trade XOK, XOY, and SMH in my Roth IRA account because I don't want to take too much risk. And SMH is probably the more riskier one out of the XOK and XOY. So anyways, so we're gonna go with the strike price of $315 strike price by January 2023. And then you can click calculate. So this is, for example, right now, if you want to get into this contract, and it will show you the date from August 17th all the way through your expiration. Obviously, red means bad, green means good. So it shows you exactly where you kind of need to be at to see if your contract is going to hell or if it still has an opportunity to go up. So for example, by August 17th, which is in 17 days, if SMH can get up to $273, I'll be up 19.4%. Now remember, it does not account for the open interest, volume, or momentum, or any of that stuff. It's specifically just time and price, and that is it. So obviously it could be a little bit more, it could be a little bit less, so we'll see. But if it ends up dropping, let's say SMH ends up dropping down to 260, so by August 17th, if it's at 260, I'm probably looking around negative $153. So I love this because you literally have a visual idea exactly where you can be at within the money. So for example, let's just say next year, August, if SMH gets up to let's say let's go for $325 by next year, August, I'll have a profit of $1,157. I'll be up 75%. And I'm gonna tell you this, just from my past experience with SMH, it's gonna go up pretty quick. SMH swings a lot. XOK, XOY doesn't, but SMH definitely swings a lot. So you could be down 50% one moment and then up 50% in another moment. SMH hasn't really let me down. And if you look at what's inside of SMH, that's part of your homework, you'll see that it's some pretty solid companies. But this is the thing. So let's say you got into contract like I did back in February, February of this year. I got SMH at $17.50. I'm gonna tell you this. I was a little nervous because during the pullback, it dropped down almost as low as I believe it was like $900, I believe. So I paid $1,700 for this contract. So $1,750, $1,750 is what I paid for it. I click calculate, and this will now give me a visual representation of where I need to be at to be in the money. Now, about a week or two ago, I was down 40%. I am now only down about 10%, I believe. I should show you right here. Yeah, I'm a little bit less than, see, that's what I'm saying. It doesn't always account for, it's not 100% accurate, but kind of gives you a general idea. Because the price currently now, like I said, is at 163.37. So I'm around like 12%, I believe, is what I'm down at right now. But if you look around here between 273 and 260, so it kind of shows you. So if this ends up dropping down to 260 by August 17th, I'll be down $375, so negative 21%. So I needed to go up a little bit, but this kind of gives me a buffer and it gives me an idea where I need this specific option contract to go. So again, I'm looking for around 315. So I have until basically, what is this, all the way up to August 30th next year to essentially have SMH get to, sorry, my eyesight is really bad. So here, let's try this right here, $312. This is raw and unfiltered. I'm not editing this. So there you go. This will kind of show you where I need to be at. So I need to be at $312 by August 30th next year for me to even be profitable or have any money still on this contract. Now, once it goes over to August 30th, I'll be negative $43, which is still not bad. So I basically have an entire year for SMH to reach $312 for me to even be profitable. And of course, if it ends up going up even further, let's say 351, boom, by May 14th? By May 14th, 351, I'll have a profit of $3,205, 183% in the money. So this really is an awesome tool. I recommend everyone use this when you're entering a contract and when you are in a contract, to monitor it, to see if you should take profit during a massive pullback, because once you start researching and getting into the stock market, you will see that seasonality matters. You will see how certain stocks move during certain times. There will be pullbacks. You will see that there's typically a pullback. There's one coming up here soon between September, October. So here I will kind of look and see where I need to be at. Should I just take profit, exit this one, wait, sit on the sidelines, and then re-enter when it dips and get in at a better price? So you want to kind of consider these type of things when you're doing these contracts. All right, and then another thing I want to go over real quickly with you guys is how you can see if you got a good entry or not, and see like the price action, like where the contracts have been for the past year. Now, again, this bar chart, you can use bar chart. Bar chart is a great tool, but there's plenty of videos out there that go over the bar chart and how to use it properly. Zay, the wealth strategist, he uses bar chart quite a bit. He has a bunch of videos on it on how to look at option contracts, option history, and stuff like that. That's actually how I learned how to look up the option history. But if you're on TD Ameritrade or E-Trade, I'm going to show you guys how to look at the history on that as well without having to use bar chart. If you don't have those, I guess you could turn off. And again, like, subscribe. Thank you for stopping by. And in the future, definitely watch some of my previous videos. So let's go to TD Ameritrade first, Thinkorswim. That is the Thinkorswim web-based. I don't know how to use that as well. It's very simple. It's cut down, a lot of fat's taken out of it, but you can actually download the actual application like here. And it gives you a lot more tools, and I do recommend everyone use this one instead. That way you can get knowledgeable on actually how to use the platform better versus just a simple web-based one. But it may do just fine for you. But if you want a little bit more advanced tools, the Thinkorswim application is the way to go. So we're in TD Ameritrade, Thinkorswim. I got SMH pulled up. Like I talked about, my expiration, as you can see right here, I actually own it, is expires January 20th, 2023. So you can click on the ask. You can click on the ask, and that's how you end up buying whatever. But if you click on the ask, you pop down here. There's this thing right here that shows you the mid. Always click on the mid if you want to enter the contract. Don't pay for the ask. You kind of just go down here, you click confirm, and I would say 9 times out of 10, it will execute at $15.30 versus the $16. So you save yourself about $70. But here's a trick. If you want to see like the history of this contract and where it's been, where it opened at, and where it could potentially go, you right click and you click copy SMH. Then you go over to charts, click in here, and then just paste it, click enter. And I already have the chart pulled up, so this is the chart, but let's just go to a different chart real fast so I can show you guys. Let's go to Apple, for example. Okay, this is Apple. Now again, copy, paste, and boom, it will show you the history of where this option contract has been for the past year, because I have it set for a year. You could go back 10 years, but there isn't. The contract opened up about a year ago, so it will give you an idea exactly where the contract has been in the past. So you can see it was as low as $7. Now again, I got in at $17.50. So I got in somewhere at this point, what did I say? It was like January-ish. Yep, I think it was around here is when I entered. I took a dip a bit and I entered right here. It went up to $28.35. I was in the money. I was extremely excited. Then it dipped a bit. Then it dipped even more. March dipped, went up a bit, and then just dipped, dipped all the way down until May 11th. It was all the way down to $7. Now, could you imagine that? I was down over 50% at one point. It freaked me out. I wanted to sell, but I also familiar with SMH and I had time. And that's a good thing about leaps. You have time. So I didn't stress on it too much because I know how SMH moves and I know we'll have a pretty strong comeback. The smart thing to have done is honestly buy more contracts, but at this time, it just had so many months of just downhill that I was getting really nervous. I was getting nervous, and I was like, you know what, I'm not gonna buy any more contracts, because during this dip, I kept buying contracts on other option plays because I was like, all right, this should be the bottom. Oh, this should be the bottom. Nope, this should be the bottom. Oh man, it's still going. It's been 3 months. I'm not buying anything anymore right now. I'm just gonna wait for the market to rebound. So it went all the way down to $7, and now it's all the way back up to around, like I said, around $15, and it's around here. So this, if you're wondering what this purple line is, it's just a theoretical options price, like where it could potentially go, where it might go, and stuff like that. So I just like to keep that up so I have a visualization of where the stock could potentially go. Obviously, it's in an uptrend right now, as you can see, and that also gives me an indicator like, oh, okay, it's moving up. But it just kind of shows you where the price was at one point. Like you could have gotten in at $7.94. Sucks for the people who bought in at $28.35. That's why you never buy the high. But this gives you like a good idea exactly like where you kind of want to be at. Like I would be comfortable buying anything around 12 bucks. If you look anything above that, I mean, look at the upside to this. The upside is $28.35, and you still have over a year and a half to go. So this is how you do it on Thinkorswim. Let me go down and pull up E-Trade for you guys. So I like Power E-Trade. So once you log into your E-Trade account, on the right-hand side, you should see something that says launch Power E-Trade. So I launched Power E-Trade. I'll type in SMH. This will give me all the dates for the contracts. You click on January 2023. Go all the way down. Like I said, I entered at 315. You'll find your 315 mark right here. And again, this shows you the last price it was sold for, $14.50. You're not going to really always get those last prices unless you buy like over 100 contracts. So again, you click on this, for example, the bid, and you see, you want to click on the mid, and it automatically sets it up for you. I kind of like that. Oh, sorry, I'm gonna make sure it's on buy, my bad. So you go over here to ask, click on the mid, and it gives you the mid price. So they actually help you out here. We're on TD Ameritrade, they automatically go for the ask. So you got to pay attention to it, make sure you move that icon over so you get the good price. But the good thing on E-Trade, which I really like, very user-friendly, you can click on this little icon right here, click on charts, and this will specifically show you the price history of this option contract as well. This will pop up. It may be confusing, like what the hell am I looking at? It's on a 5 minute, it defaults to the 5 minute, I believe. So you want to go to when you're out, and then it goes to the daily. And here, once again, it shows you visual representation of where this opened at, around the 786 bucks, went up all the way to around 28 bucks. Then it dipped down all the way to $7. Man, I'm actually really mad that I didn't buy more contracts. I did. This is crazy. I should have. I really, at seven bucks, guys, really, like, man, I should have definitely bought more. But you know, like I said, emotional. I'm very emotional sometimes when it comes to the stock market, which is not a good trait. I'm still trying to control that. But yeah, so $7, and now we're up around, it says $14. So I'm still down right now. But you can see the upside. It reached as far as up as $28. So that was it, guys. Just want to kind of give you guys a quick rundown. I'm gonna try to do a few of these sessions every once in a while for you guys. Like I said, the options profit calculator is a gem for me. I love it. I don't see too many people talking about it, and that's the reason why I want to do a video on this real quick, so you have an idea. That way, you know, like when you need to take an L, when you don't. Because, like, again, for example, real quick, I know I was trying to end this video, but let's say again you paid $28 for this, right? We saw that the high was $28. Let's say you got into a $28 contract. Did I miss here? Oh, hold on. 2023. 315. We paid $28 for it. This gives you an idea of how much room you got. So right now, once it reaches $299, by August 17th, you will actually be profitable. This just kind of shows you the power of SMH. Like I said, it swings like crazy. You could play with different stocks, put Tesla in there, put Apple, put XOK, put XOY, whatever option you want, just kind of put it in there and go look at what the high was, what the person paid for it at the high price, and then see like how much room they have to be profitable. So even at $28, it seems like if the strike price is 315-ish, they're good until basically February 13th. They need SMH to be at 315. So yeah, and the lower it goes, if it stays around 260 by January, they're down 69%. You might want to have a conversation and see, am I able to come back from this? Which again is SMH. You probably will be able to come back from it. But again, play around with this tool, optionsprofitcalculator.com. I'll put the link below as well. Remember, guys, follow me on Instagram at Trading with a Dummy. You can follow me on Twitter. I'm not on Twitter often, but it's Trading WA Dummy. And of course, continue to watch my previous videos. The skits, I put a lot of effort in those. It doesn't seem like it, but it takes a lot of time to edit those, and it takes a lot of time working with kids. So again, guys, thank you for stopping by. This was Trading with a Dummy, the homework session. Peace out.